So in the short term, it's very tough to predict what will happen with any risk asset class. And as we talked about earlier, these are very volatile times for risk asset classes across the global marketplace. So I'm going to refrain from making any short-term predictions, but what I really want to reiterate is in the long term, U.S. high yield is a superior risk-adjusted return asset class, one of the most attractive asset classes available to investors. And while there may be ups and downs in the cycle, for the disciplined long-term investor, this is a great asset class to own. In the meantime, given that we have unparalleled resources to find investors opportunities as part of our portfolio construction, I'm looking to take advantage of any market volatility in the short term to make good long-term investments for our investors in the fund. And that's exactly what I've been doing in the recent past. Whether there's a quick resolution to the European financial crisis, similar to what happened in 1998 with the Asian financial crisis, in that case, U.S. high yield will rapidly improve, or if it takes longer for there to be stability across the global marketplace, I believe now is a good entry point for the long-term investor, given that spreads today currently stand at about 700 basis points over U.S. Treasuries, as compared to the long-term average of about 535 basis points. So between collecting the high current yield of about 9% in U.S. high yield, plus the long-term opportunity to make some capital appreciation as the spreads return to more normalized levels over time, long-term investors will reap those benefits. The U.S. high yield marketplace is a less efficient marketplace when compared to the equity markets. And especially during turbulent or volatile times, the technical selling pressures that may arise in the marketplace do create short-term opportunities for the investors that are really staying focused on their companies. And that's exactly what we look to do as part of our high-income discipline at Fidelity. So the recent market volatility has created opportunities for us that I've looked to take advantage of, and it really does flow across all different industries. Currently, the average credit rating in the fund is roughly single B rated, and I think that's a very good balanced position for the fund to have. Again, if there is increased volatility over the near term and high yield continues to sell off, I'll start to get more aggressive in my underlying investments. But in the meantime, this volatile environment has created a lot of very good opportunities, and it really does span across industries. And with our 24 analysts focused on these companies across every single industry, we're out there looking for those opportunities for our investors.